And Dominic, I think we have to begin with the reaction that we've seen to the OPEC production cut. President Biden labeling this as disappointing, certainly a blow to his foreign policy efforts in Saudi Arabia, but some even saying now that OPEC is moving against the United States. And to my colleague Hadley's question at the OPEC conference, even using energy as a weapon. Your view?
Well, I think the reaction from the US is quite natural. I think they're expected, given the tightness of the market, that supply remains where it is or even increased at the end of the day. As we're going more towards an election event, you want to have lower oil prices. Affordability is a key factor to look at. So I think at least on his point of view, we can understand his reaction. I think there's still optionality. If you look at what the US can do, I mean, part of its oil program, release a little bit more inventory, or you can add to additional release from the strategic reserves. So I think that is, at least from his perspective, on the table. As for OPEC, I think you can obviously say, it's a little bit odd. Why cutting when apparently the market is tight? But you could obviously also argue that you want to see a stable price, number one. Number two, you can say there is a lot of demand uncertainty happening at this point in time, and it's like a little bit of a preventive measures.
So this production cut and the subsequent higher prices we're likely to see over the next few months, do you think it's going to hinder the US and the West's ability to introduce some kind of price cap on Russian crude by the end of the year?
Well, definitely it complicates. I mean, Europe still wants to get rid of, depending on how you calculate, oil and products. I mean, it's between 2.5 up to 3 million barrels. You need to find these barrels. I think that's number one. And from our perspective, we're still quite concerned if that kind of rotation in trade flows, how is that going to really work out? Because the Russians were clear, if you force us to accept the price cut, we're simply not going to deliver crude to you. And so I think that kind of situation means that maybe from a Russian perspective, there is, at least global supply perspective, there's an additional 1 million barrels at risk here. Plus, think about gas prices are tremendously high. So you get that additional boost from basically oil to gas switching, probably also an additional million barrels. So inventory situation, I think is going to be tight. And as we get further draws, you're going to see prices going up. That's simple. And we're looking at 110, 125. That's for us point of gravity when it comes to crude oil.